Let's get the big picture of the financial markets. So first off, read this disclaimer carefully and do your good deed of the day by liking and subscribing. So when we look here at the sectors, we do see that there's a lot of money flowing in and out of different sectors. So there certainly is some turmoil. Looking at the megatrends, they are still outperforming the S&P 500, but only by 55%. And if you go a year back, then the outperformance was much more. The average pullback here is minus 46%. So that is very substantial. It is, however, in these beaten down megatrends that it's most interesting to look for potential bullish opportunities. There will be short trades as well, but the thing is that and that's something that we have seen across many market conditions, and that is that some themes will form lows way before other themes, and also the opposite. I mean, many of these themes, they were in these extremely strong uptrends, higher highs and higher lows, but then they peaked way before the S&P 500 peaked, for sure, and then they started very substantial downtrends. So it was fully possible to have short positions and long positions in the same portfolio, and for both to be profitable. And the nice thing about having that balance is that you are more market neutral. Looking here at the other themes, we saw here that home improvement got hit very hard on Friday, approaching minus 4% average pullback. That is definitively big. And home improvement, it's one of those themes that kept going up higher and higher. Yeah, and it's when things looks peak bullish that it's time to consider some bearish opportunities, and also the opposite. So let's look at some charts. So here is the S&P 500. Nothing to be worried about so far. We have a very strong uptrend. The key thing for the uptrend going forward is definitively this purple 20-week moving average. It's a very big deal. That's where the bulls come back to rescue. So now we have tested that moving average 1, 2, and actually 3 times in very quick succession. So if you look at it a bit here, there is a change. So here we test and then we rally for many months. Here we barely test it and then we have a longer term rally. Then we test it a bunch of times and then we have a 3-week rally until we start to get into trouble and then start to test that support level again. So the bears are being more aggressive now than they have been in a very long time. To be perfectly clear, what the bears are doing now is just normal. If you look back here at the history of the S&P, you see that most of the time the bears regularly go down here to explore these longer term moving averages. That is completely normal. So this is what a normal market condition looks like. You test the 50-week moving average, then the 20-week a couple of times, then you test the 50-week. I mean, this is what the normal market is supposed to do. This is the abnormal stuff. This is where the market refuses to explore some of these longer term moving averages, and because of that, you get a situation where you can't explore them. Because now it is so contingent on more momentum that a test of the 50-week could become very self-reinforcing. So it's just the market has really put itself into a corner, and this you could blame a lot of people for that. The Fed, you name it. The things that what we saw here before in all of these years preceding this super rally, that is when the market is more balanced. When you can have a more deeper correction without it causing full-bore, panic. On the daily data points, the blue 100-day moving average is clearly the level to watch. So let's look at some other markets. Let's look at Bitcoin, the Bitcoin index. So yeah, Bitcoin just, I mean, it lost, the green 50-week moving average in a very ugly way. We have this very clear head and shoulders pattern. Yeah, this is very, very unfortunate, because now we have the 50-week as resistance, and you have horizontal resistance. So yeah, very messy. Yeah, here on the daily data points, we are below the 200-day moving average. We have a death cross here. Yeah, just a mess, an all-around mess. It is possible that we are going to have this rally that helps us form the right shoulder of a head and shoulders pattern. That is fully possible. But that would just be initially bullish. The problem with head and shoulders for Bitcoin is that they also have a nasty history of playing themselves out. So the bulls definitively should buy if we do get a rally that forms the first part of the right shoulder, then the bulls need to aggressively push above these levels here to try to neutralize that pattern, because it can become really, really bad if it starts to play out. Let's look at gold, a classic thing to keep our eye on. So gold is kind of just goofing around where it's been for quite some time. I am more bullish than bearish on gold, but it's just messy, just very, very messy. You could certainly make a case that we have what looks like a rounding bottom in development, which itself is part of a gargantuan cup and handle pattern. So here we have the giga cup, and here is the giga handle. Okay, so let's just look at a bunch of different stocks. Let's look at Netflix as an example. Some stocks. Netflix, interesting. So Netflix here is testing the blue 100-week moving average. So whenever you have a security test, a support level like this, then you need to look back at history and see whether it tends to work out as a support. So here, support. So it does have some history of working out. The problem is this, though. So not that far back, it failed temporarily. Here it was very clean support level. Here as well. So the blue 100-week moving average has a lot of legitimacy for Netflix. So I think it's an interesting level to watch for support, or to trade as support. Here, when we lost it, it did actually go down, approach 10-ish%. That is a lot, though. You can't really use a 10% stop level, because these situations are better, where you have this. You can have a stop a bit below the support level, but you don't need to be like super wide. And here it was a beautiful trade, and here as well, just very clean. So yeah, we have support, but it's a bit noisy. Let's look at Tesla. Tesla, also one of those FANGMAN stocks. Yeah. The big problem for Tesla is that it's such a huge company in terms of market cap. So let's just... Okay, so the current market cap for Tesla is 1.06 trillion. Okay, trillion with a T, US dollars. That's huge. That's very, very, very big. So for the stock to just double from the current level, meaning a 100% gain, it would be a $2 trillion company. Is it possible to become a $2 trillion company? We actually don't really know. If you look at, the biggest companies in the world, you will not see... you will see very clearly that, the $2 trillion mark is not really a thing. I think there's way better opportunities when it comes to much, much smaller cap stocks than Tesla. That doesn't mean I'm bearish on Tesla. It's just that it's just the math of market caps. The amount of money that needs to flow into this stock for it to go up to a $2 trillion company, that's huge. That's a lot of money. Reddit is not going to push this one up to a $2 trillion market cap. Yeah. From a technical perspective, you could certainly make the case that we do have something that looks a bit like a bit of a messy inverse head and shoulders pattern. That is bullish, but you still have that issue with market cap. Okay, so let's look at some other securities. Yeah, so let's look at some other FANGMANs. So let's look at Facebook, or I guess we can call it Meta platforms. So in this instance, we have this green 50. Yeah, but it's a bit of it. You see here that it does have a very messy relationship with the 50-week moving average. I think that what is more interesting here actually, and that is something that a short seller would use, and that is this purple 20-week moving average, which has been a pretty good level to add to your shorts. So let's look at the daily data points. So on the daily data points, the blue 100-day moving average is that key level that the short sellers are watching. So in the same way that the bulls buy at support on a moving average, the bears they short at resistance. Yeah. So Facebook is a definitively very interesting company. I am very bullish on virtual reality. But I do think that the VR that really works, it's still quite off into the future. The headsets are still clunky. They are way better than they used to be, but the issue is that the human brain is extremely sensitive to anything that poses a risk, and when there is the slightest minute mismatch between where your brain think you are versus what you are seeing in VR, then you will get sick, and that is just a pure just defense mechanism, and a very important mechanism. But the technology needed to have like a one-to-one relationship where there's no like mismatch. That is way off into the future. I know a bunch of people who are like big into VR, and even the most hardcore people, they play it just, some, like maybe just an hour at a time, because if you go beyond that, it's very easy to get a bit nauseous. So it would be kind of like funny if, these headsets comes like bundled with like a barf bucket, Obviously it won't, but, yeah, so let's have Microsoft. Oh, interesting. So here is, maybe we should look at the daily data points. Yeah, I think the daily data points are a bit better. Well, at least the dailies are watched by more people than the weeklies. So let's draw in the support level that we just lost. Yeah, sort of testing the 100-day moving average in blue, but here we have these clear tests. So the blue 100-day moving average, it obviously is a very, very big deal. Guess what? We have just lost that moving average. That's interesting. From a more bearish perspective, of course. I mean, very ugly rejection of that support level, well, which became resistance on Thursday. This is a very ugly candlestick. So interesting breakdown here in Microsoft. Let's look at Ford. So I saw a video the other day on YouTube, because I follow a bunch of YouTube finance channels. I follow channels that give good information, but I also follow channels that have like an atrocious track record as well. I think it's just interesting because you then learn sort of like the logic they use and so on and so forth. Anyway, yeah, one of these channels that they made, a video recently where they were very bullish on Ford. And I'm like, I like to look at the history, of course. I do this, I click here, and then I'm like, okay, so you're bullish on Ford. Well, throughout the vast majority of history here, the current RSI level is not bullish. Well, it usually doesn't tend to reward bulls. So if you are a bull and you have this level, in the past you usually got taken to the cleaners. And also when you look here at, a bunch of other indicators, like the distance from the 200-week moving average in red, the blue 100-week. The only sort of possible hope here for the bulls is that, looking at the green 50-week and the purple 20-week moving average, they have been way further away in the past. So let's do like a very quick historical study here. So we have the same RSI level back here. It led to a sell-off. Then we have here we do get a bit of a shallow sell-off. Here we get a very sharp, well, very quick sell-off, but then it did actually go higher. Let's go a bit further. Well, let's actually look at the previous time where we had, this ridiculous distance from the blue 100-week and the red 200-week moving average. So where is that? Yeah, that is here. So during this spike here, so that's interesting. So during this phase, we had this extreme rally, and we reached these obscene readings here on the 200-week moving average and the 100-week. On the 100-week moving average, we did, which also had, a very high RSI level along with it. Then we did initially get a nice pullback. Yeah, approaching a minus 30% sell-off. That's a nice short. And in this instance, then you get, the big enchilada, minus 52% pullback. Amazing short. So the history here of this stock, and it makes a lot of sense to judge, the stock by its history. It doesn't favor more upside. That doesn't mean that there can't be more upside. It's just that based on the history of the security, this usually does not work out well for the bulls. Something to think about, Yeah, let's look at the GE stock that I haven't looked at in a while. Still far away from its prior glories. You could make the case that we have a bit of a noisy inverse head and shoulders pattern here. So now I'm just doing very quick, pattern analysis. Obviously, you need to do more in-depth studies, look at fundamentals, the seasonality, and so on and so forth, and take the average of the bullish and the bearish points. Purely technically speaking, we do have an inverse head and shoulders pattern, and that is, bullish to an extent, but you need, of course, more data. You also see here that, let's jump to some other stocks. Let's actually look here at uranium. You have this major, it's kind of funny, right? Because we have this major energy crisis, and uranium and natural gas even is now being reclassified as green. I actually have thought of uranium as greenish for a long time, along with solar energy. It's my favorite. There's obviously geopolitical reasons why uranium is very suppressed. To really think a bit suspiciously, I'm very suspicious about the bad PR towards uranium that we saw in the past, especially. And that's because I've seen a lot of videos, of prior test sites for nuclear weapons, and also videos from Chernobyl. I thought that I would see this desolate place, no wildlife, no flowers, no nothing. But no, it's, there's all kinds of flowers, there's all kinds of birds, wildlife. I expected to see a bunch of mutants, like birds with 4 heads and stuff like that, but no. That's a bit strange. I'm not saying that radioactivity is not a thing. What I suspect, however, is that radioactivity actually, dangerous radioactivity is a very temporary short-term phenomenon. However, it has been portrayed as something that is way more long-term. I'm very suspicious about so I think that basically the propaganda against uranium has been like global power politics and not fact-based. Anyway, here is uranium. Being in a nice uptrend, you see that the previous time it corrected, we did find some decent support here close to the green 50-week moving average. We are pretty close to that support level again. So let's see how far down that is. That is just 3-ish% on the daily data points. Oh, nice, clean. This is interesting. So if you want a position on uranium, and you have basically just been waiting for like a reason, then this is your reasons. This is your reason. We currently have here support at the red 200-day moving average. So I think that from a risk-reward standpoint, looking longer term, this has been one of the better entry opportunities. Obviously, if we were to lose this support level, that would be more problematic. What I see here that is potentially a bit bearish is that, like here, as an example, we test it a bit and then we rally fast. Here we test, 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 and test. So we are not seeing like that confidence from the bulls that we would like to see. Yes, I think that's the items I will go through this weekend. So taking it all together, there's bullish opportunities out there, but there's also bearish opportunities. Whenever you put on any position, you always have to use stops. That is literally what all the best investors of all time talk about. Stops, stops, stops. The only people who can decide not to use stops, that's people who have huge accounts. So people like Warren Buffett, who have such a big account that if he decides that support for a stock is at $13, then he can just use his account and just buy big positions every time the stock pulls back to that level. And that is one of the ways a horizontal support level is formed. So behind the scenes, you have some big whale just sending in like a big buy order every time that support is tested. And eventually that can be extremely profitable, even for well, obviously for the whale, because the whale then is able to get in at that low level, and the bears, they will get spooked when they see that there is this mysterious inflow of money coming in every time support is tested, because the bears, they want to break the support level. But when they start to cover their shorts, then the low will be formed.